Here we go now. That means to play Mike. Mix in the mix on the music skill. This is what I was fucking born to do. Let's go. Welcome to Money and Investing Talk with Ali, Sharaki, and Kian. In this session, we're going to be talking about the different level of risk and investment and risk management. So I'm going to ask Kian, see if he knows anything about this, because he knows a little bit of trading, but knowing trading is totally different to understanding risk and risk management. So Kian, what do you know about, what do you think the relation between the risk management and category of the risk of different investment is?
Well, I think there's two types of risk. There's a high risk and low risk. So when you're doing a high risk, you're more likely to get a higher return, and if you're doing low risk, then you're getting lower return. Now, what I mean with high risk and low risk is, for example, the long-term trading, like property market, or high risk is short-term trading, for example, like 5-minute chart, 1 week, and stuff like that.
Wow. Okay. You just answered the question. That's really good. Well done. Well done for knowing this much. Yes, absolutely true. Is long term and short term, and depend on how much risk you are taking. Your profit depends on how much risk you are taking. So if you are taking more risk, obviously you're gonna make more profit. What does that mean? When you are taking more risk, means you're risking more to lose your money as well. So for that reason, you're gonna make more money as well. Plus, the same way you could lose all that money as well, right? So the first one is the property. The property market is the safest market, but also it gives you the lowest return. Sometimes 5%. If the market is going up, 5%. If not, the market is going flat. So you just have to buy your property and wait. Especially if you bought it and then the market drops, then it's gone cheaper, so you are in trouble, right? Exactly same thing can happen in the property market. Same way, you can lose 5% of your property. Also, you can gain 5%. This is what you need to understand, right? So it depends on the market, if the market is going up or going down. Generally, all markets are going up generally, right? But how long they stay in down market, it depends on the category of the assets. Now, when we talk about, for example, gold, generally gold goes up. If you're a buyer of gold and if you invest in gold, it depends on what type of gold you are investing. Is it tax-free? Is it not tax-free? And how long you want to keep it, right? Where you bought it depends on all this. And also the gold this year maybe goes up, next year maybe come down. But generally for the last 100 years, the gold has been going up on the chart when you're looking at it. So they are all investment. But you need to understand any kind of investment, 1 year goes up, 1 year comes down, 1 year goes up, 1 year comes down. But in the long term, the investment has to keep going up. That's what you need to understand. Now, in gold, obviously, you put in, you cannot start even with the £1,000. In property, you need more money to start in the property market. But also, it's going to give you a lower return, maybe 5%, 6%. Unless you are into flipping to repair it, I don't know, sell it, then you have to think about the capital gain tax and so much different taxes you have to pay. And is it going to actually eat into your profit or no? So you have to think about it at the end of it. Is it going to give you any profit or no after you paid all the tax and everything? Depends on how you bought it, how much you paid for it, where you bought it. These are all important factors when you are going to property. So that's the lowest risk of investment. The next level of the investment, it comes to index market. The index market, the stock market, index market, investing inside the whole market, US market, American market, UK market, European market, the world market. This kind of market, they generally go up all the time. But also sometimes they go to phase 2, they come down. So we call it market is breathing. Market goes up, market comes down. Maybe for this month's market is going down, next month's market is going up. But generally for the last 100 years, also the stock market has been going up. But you don't need too much money to start in it. You only need, you can start with anything, even £500. You can just start with your own ISA, right? You can just start with that. And it's going to give you between 14 to 20% minimum minimum return on investment if you don't know that much about it and you just start to invest in that one. So you are risking more, but you are gaining more. So you are risking to lose 20% of your money in that market. Also, you are gaining 20%, 25% every year in that market if you are investing in that market. Now, if someone says, I don't want to risk 20, 25% of my money, okay, then don't invest in the stock market, right? But stock market is something last 100 years has been making many people rich. Now, then it comes to the investment like whiskey, whiskey, for example, did you know is tax free if you keep it in a in a barrel. So many people, instead of investing in property, they actually go and invest in whiskey because it gives you about 12% a year and you don't pay no tax on it. I'm not a tax advisor, I'm not allowed to talk about tax and stuff here, but that's another type of investment. Some people, they go and invest in more higher risk, which is going to be a crypto market. In crypto market, you could have 300% return, but also you could lose your money. So you really need to know what you are doing. Now, more risk you are taking, more knowledge you have to enter the property market. To gain just a little bit of profit, you don't need that much knowledge. You can just, yes, it's good to go and do one of the property courses to understand where to start, how to build your portfolio, how to get the money out, how to leave the money in for the all sorts of things, for tax purposes or everything. But also, if you want to earn more money, you got to take more risk. To be able to take more risk but also be safe, you need to learn the knowledge. Now, to be able to take more risk and make more money, you need to also have the knowledge of doing it. For that reason, I don't recommend you to invest inside the crypto market, especially if you don't have a knowledge of it. I have 10-15 years of trading, forex trading, investing knowledge. Still, for me to enter, I even turn my 2,000 pound to 400,000 pound in crypto market, right? In 2 years just. But to be able to stay in that market and keep risking that amount of money, I actually had to go and do 3 or 4 extra courses this year, because blockchain is something which is improving every year. Everything is changing. Lots of different features added to the exchange. So I had to go and learn all this. If I don't know this stuff, I shouldn't be investing in the crypto market. Guys, only invest in a market that you know. That's what Warren Buffett says. He buys Coca-Cola. Why? Because he loves Coca-Cola. He drinks, did you know he drinks 10, 12 can of Coca-Cola a day? Did you know that? Yeah, and he invests in Coca-Cola. That's what he says. He says only invest in a market you understand. Now, if you are interested in a higher return market, of course you have to risk more. Now, how can you manage your risk? By going and learn it and educate yourself how to manage yourself, how to read the market, how to do fundamental analysis, how to do technical analysis. But please don't just go and download the app and start putting some money inside something, because you are gambling. When it goes to the higher return, higher investment, of course you need to have some knowledge.
If you do we actually covered how much. If you do check out our other podcast that we actually did a couple of weeks ago, 1 or 2 weeks ago, we actually did show you guys the returns from, for example, how much you're gonna get yearly from property, how much you're gonna get from the shares, and all the stuff that we just explained. So you should go check that live out and that podcast if you want to know more about how much you get, how much return you get yearly.
Absolutely. And you know what? This is not financial advice. I'm not allowed to give financial advice. I'm an investor and mentor. I am not financial advisor, so I can't give you financial advice, individual financial advice. But please, investment is the only way for you to achieve financial freedom, because to be able to be financially free, you need to have more income than just one income which you go to work. And the other income you can have is not from having a second job. It's from investing your money in a market, so it gives you return. Now, which market you have to invest in depends on your knowledge and your riskability. How much are you willing to take risk? More risk you are taking, more return you can have, and that means you could also lose the same amount of money. That's me, and I hope you enjoy this podcast. If you think it was value to you and it makes you to have more knowledge about investing, write a comment for us and let us know what you think. Thank you very much. Don't forget to subscribe and like our page. We love to serve people. Thank you very much, and see you next week.
See you guys.